The market hit its longest bull run on record today, with the S&P up more than 300% since the lows on March 9, 2009. Just how much longer can it run? Joining us, CNBC contributor Peter Boockvar from Bleakley Advisory Group, Joseph Zock from Tocqueville Asset Management. Joseph?
How are you?
How much longer?
Well, I can't predict market tops, but I can tell you that our firm is an active anti-consensus manager. And what does that mean? It means we look at companies that have sound balance sheets and strong cash flow projections. And analysts come into our portfolio management meetings every Monday, and they're still coming in with reasonable valuations on stocks. So that is my personal canary in the coal mine when analysts come in and say, I just can't find names, investable names. So they're out of favor. They're underappreciated right now, but they're still there. So I could easily come in and say that we've reached peak earnings, peak valuations. That's an easy argument. And if I told you that China was slowing, the Fed was tightening, and our government had great debts to pay, that could be a bear case easily. So there's plenty of room on both sides for the macro folks to argue about it. We just look at stocks, we just look at valuations. So our job is relatively simple.
Weren't there a ton of cheap stocks that nobody liked in 1999 and 2000?
Yes, there are a ton of cheap
Market
stocks.
top, right?
A ton of cheap stocks, but not in the tech sector, not in the high,
exactly, yeah.
Right? So you had to flush them out. Right now, we're looking at energy stocks, some industrials. The tariffs have brought on valuations that are compelling for certain companies that currently have high valuations, high costs associated with importing goods. They're passing along to their consumers, but eventually they'll be able to pass along those costs and they'll be profitable. So it's a fascinating market to be in, and we're very active.
Peter, what about you? You see, I mean, you're always looking at the macro risks on the horizon. I know you've been maybe skeptical at some times that the stock markets rally. How do those stack up today?
Well, bull markets typically get killed by the Fed and the tightening from other central banks. And we are getting deeper into that tightening. In the fourth quarter alone, the Fed, the ECB, and the Bank of Japan, the net liquidity injection will actually go to zero. It was $100 billion a month in Q4 last year. So that will be a test of the market to see how it handles that on top of another Fed rate hike. So central banks will always push us too far, and we'll see how the Bank of Japan and ECB can exit their policy. But I have to believe there's going to be an impact that will affect valuations. We have credit cycles now, not economic cycles, that ebb and flow with monetary policy. So we have to pay attention as we get deeper into this tightening cycle.